All right, so we got Josh Mente, however you want to pronounce it. Either way is probably fine with him. He's got about 15 minutes, and then we left some time, about 15 minutes for Q&A afterwards, because after he discussed some of this stuff, I'm sure everyone's going to have a lot of really good questions. So do your thing, and if you guys can't hear him, just tell him to speak up a little bit.
Who's Josh? Tell us who Josh is.
Josh is going to tell you who he is.
Thank you, Glenn. My name is Josh Mente. I'm a real estate agent. I got my license in 2008. Started working with bank-owned properties and have grown a full-scale realty team. We go under the trade name of the Maryland Home Team, MD Home Team. You've probably seen some marketing, stuff like that. Anyway, can you hear me? No. Okay, sorry. So anyway, I'm just coming here today to talk to you a little bit about the REO market. Has everybody bought a bank-owned property before? Yeah, a couple of them? A lot of people try? So the state of the market, I wanted to talk to you a little bit about. I was in Dallas last week at the 5-Star Conference, which is the biggest default servicing conference. I go down there to meet with banks and talk to them about what's going on, figure out what's going on in the industry. The good news is here in Maryland, it depends on what side of the fence you're on, but the default inventory has remained pretty steady. So good for us as investors, right? But maybe not good for the people that are actually losing their homes. So in the foreseeable future, Maryland's in the top 10 for foreclosure filings, statewide. So top 10 puts you in the top 20% in the country. So everything seems to be kind of just chugging along. There are some things that are happening a bit different. A lot of the government, the GSEs, the government organizations, the Fannies, the Freddies, and things like that, appears like they're actually exiting the business or trying to. So what they're doing is they're actually selling off pools of these bad assets, either as loans or actually as pools of already foreclosed properties. And with that, what's happening is basically hedge funds are scooping in and buying it up. There's a company called Lone Star out of Dallas, and it's probably somebody that you may or may not have heard of, but they control a good bit of the inventory that you'll see hit the market. So the good news is the government's getting out of the way and it's getting into private hands. We'll just see what that, what that means to us moving forward as investors and things like that. So I want to talk to you a little bit about the internal process, what we go through and how we do things. Does everybody understand, like cradle to grave, how a bank property gets into my possession as a listing agent? Yes? So the good news is, right now we have about a little over 100 properties in our inventory, of which only probably 30 are actively on the market. So at any given time, I have control of another 60 properties that are sitting out there just waiting, shadow inventory to get on the market. With this, there's opportunities that present themselves. Now what happens basically is that we go through a due diligence period. I offer my recommendations of value, what banks should list for, and sometimes they listen, sometimes they don't. So unfortunately don't have full control over how that plays out. But what happens in the process is that we get a listing agreement over, right? So this isn't just me, this is how it works in the industry. And we deal with investors, and when we get it, we put it on the market, but we can get it out to people and quick to act. So what we do is go through our database and actually send it out to, well, Ben works on my team as the investor specialist, he's here. And Ben is the one that does this, but he goes through our database of about 600-700 investors in the state of Maryland and sends it out to people and tries to get them a jump start at what's happening. And that's happening pretty much across the board if any teams are running at a high level. I want to talk to you a little bit about the bank approval process, because I'm sure if you've made an offer, you're kind of wondering, how does it work? It's like a unicorn, right? So you've heard about these asset managers, do they really exist? That kind of thing. And really what happens is they're only given, depending on the bank, a certain amount of authority. And it's usually within 10% of the asking price, and a lot of times less than that. So if you're going out first look, you're looking at things, and you're submitting offers 50% below asking price, I can tell you beyond the shadow of a doubt, I've never seen one accepted. So that's my tidbit to you. If you're that far below and it's new to the market, probably don't waste your time. It's just not going to go anywhere. They don't have the authority to do it. It hasn't been out there long enough. They haven't, seen what the market will bear and things like that. So. Do with it as you may, but that's basically what happens. One thing I would say to you guys, It's basically the new inventory, as everybody knows. What happens is everybody's keying in on it, right? So you're dealing with it, and I have it, and I'll have a bank property that goes on, and all of a sudden I get 10 people's phone calls. There's no key here. Yes, somebody stole the key. We'll put another one back in the box, right? So go through all the games everybody plays. We get 10 offers, 12 offers, 15 offers, all that kind of stuff, and work our way through it. Now that's a tough game to win, right? So that's the game of being the highest bidder, right? Which we're all trying to work it the other way, right? Trying to get for as little as possible. So basically, you know, what I would look at is trying to find a niche within it, right? So start to look at properties that are aged, right? So look at properties that have been on the market for 120 days, because what's happening is it's sitting in the asset manager's queue, and it starts to pop up on reports to their higher ups. Their higher ups are going, what's going on with this? Why hasn't this sold? Bad agent, bad values, what's going on? So that's where the opportunity is, because what happens then is you can come in because they have pain. They want it gone. They want it off their reports. They want to report to their higher up. They have certain success levels. At that point, and it's usually about 90 days to 120 days or plus, that's when you can go in and start trying to find opportunity and create opportunity, right? So you can start to make offers below list price. This is where you'll have the greatest success with it, or at least from my experience over the last 8 years selling 1,000 of these things. But it really depends on the bank, right? So it just depends on who it is and who actually owns the paper. Everyone has different philosophies and different approvals that they're allowed to do. Assignability, is everybody here probably wholesale a property from time to time? No? I'm sure, raise your hand if you've wholesaled a property. So, you know, with wholesale properties, bank contracts are written where you can't actually wholesale them, so you have to find a different way to do it if that's your end game, right? There's ways to get around it. Banks are getting smarter with it. You used to be able to put it in an LLC. It would be 123 Main Street LLC, and then you just assign the rights to the LLC to the person who it goes to. Well, banks now actually ask for proof of the LLC and the formation and all that stuff. So you've gone through the process. You've at least gone down to 801 Preston Street, or 201, I forget the address. 301, there you go. And yes, not far from Mount Vernon, right, or and over by Bolton Hill. But so you go down there, you file, and you do all that kind of stuff, and you can assign it. It's a tougher game to do now, assigning bank-owned properties. It's not something I recommend. It's difficult, but you know, everybody has their own way of doing business. Online auctions. Has anybody used online auctions? Success? Right. So what happens is banks are now starting to find different alternative methods. So we'll have a property on the market, and all of a sudden we'll get an email. It's like, okay, this is going to auction with Hudson and Marshall. This is going to auction with so-and-so. So there are different avenues now that you can actually reach out to and try and find different ways to acquire these properties that are still through the same sources of owners. The greatest recommendation I have for you, and I'll tell you a little story. I took 2 investors with me one day to go look at a property, right? We walked in, one seasoned, one unseasoned. We opened the door, could smell mold right away. The unseasoned investor goes, oh my God, it smells like crap, right? And the seasoned investor goes, smells like money to me, right? So find that opportunity, right? What's wrong with the asset? Why isn't it selling, right? So key in on those kind of things. You can go into the agent comment section. You can see that they've said there is mold here. They can have disclosures, you know, things like that. Search for properties in a different way. Go after things that people aren't going after, right? It's easy to pick the low-hanging fruit, or what appears to be the low-hanging fruit. The new property on the market, right? And the property that everybody's going after. I don't know about you, but I wouldn't want to be part of that, right? So I would try and find a different niche and a different way of going into it and figuring it out. I didn't want to take up too much time, kind of just give you a little, you know, nuggets and things to do, or at least something you could take back to your business. I usually, when I do this, I find that people have a zillion questions, so I prefer, as my own method, I love mastermind sessions, right? So that's where I do my greatest learning and growing. So I always want to give back. And so anyway, I wanted to open the floor to any questions, see if anybody had anything they needed answered. Chris?
Josh, question for you. What makes one offer look better than another besides price, in terms of how it's presented or supporting documentation or anything like that?
Great question. I probably should have put that in here and talked about that, right? So here's the thing. We get phone calls every day. We get 400 phone calls a month. Everybody's a cash buyer, right? Everybody's got cash. I'm a cash buyer, right? Whether it's hard money, whether it's actual cash, whether it's retirement funds or whatever it is, right? So that in itself is kind of played out in a way. What the banks are actually doing is trying to figure out who is the cash, who is the hard money, because they're treating them a little bit differently, right? So structure, as far as it goes, this is the things that banks look at. They look at, it depends. So it's comparatively, if there's multiple offers and you're compared against something else, right? They're going to choose cash over financing every time. Well, not every time, but just about. They're going to look at close dates, right? So the sooner you can close, the better off it is. Basically, look at their pain points. We need to get rid of the property, and we want to make sure there's no impediment to sale, right? So with financing, that is an impediment to sale because there's somebody else that has to actually approve your money in order to get it sold. Above and beyond that,
It's funny that banks don't like financing, right?
yeah, exactly, right? Well, they don't like it. They like financing coming in, but not going out, right? So, right. Exactly.
But another way you can beat, like if you have two different investors going at the same property, you can also, because I won a lot saying no inspection period.
Correct. That's what I was actually just going to get to before Glenn was saying it. So inspections, right? So inspections, banks are selling all their properties as is, right? So it is written into all their contracts. I've yet to list a property that wasn't written as an as-is sale. So if you don't have inspections or you do have inspections, they're going to look at that and weigh heavily on it. And those are probably the three biggest things that they look at. I think that they also look at price, obviously, right, in relation to where it's at, because they go through a big process. So I do what's called a BPO, a broker price opinion. They also have a second person that comes in and does a BPO. They also have AVMs. They also, I don't know, they look at, Zestimates, right? I don't even know what they look at, but they somehow make a decision, right? So, you know, in all of that, it's basically trying to find your way. And sometimes your best resource is to actually go to the broker directly, right? So for me, if you're having a conversation with me or on my team, because we scaled to a certain level, I have an investor specialist that handles it. Ben has some inside knowledge to a certain degree that he might know, like I've conveyed to him the pain point of who the asset manager is. Like I said to Ben the other day, we had a property listed, it went to auction. Why, I don't know, they did, because they're trying to get market value for it. They went through that pain process, and then the asset manager calls me and goes, what do I gotta do to get this sold? I'm like, price to sell to an investor. It's pretty simple. Okay, can you find one? Sure, I can do that. Ben, go out, and he was able to write 2 contracts, you know, and right now we're working through the negotiation process. So sometimes working with the brokers and seeing what's going on and reaching out to them. I didn't actually touch on that, but you know, being with the person who has control of it sometimes can make a difference in the aspect of they may have some knowledge of what's going on or know that a price reduction is coming or something else is happening. Not that they would hold back anything because it's all going to go into the public, but having the opportunity to see it first or do it first or act first, that kind of stuff. So those are pretty much the big things as far as what would strengthen an offer as opposed to comparatively against other ones. So Nick, did you have a question?
So like, what if you could look at a property and there's clearly mold, but it's not disclosed, and investigating might know it, and you kind of present that with your offer and kind of just be ignored?
So it's an as-is sale. You buy it as is, where is, right? So what you do with it after the fact is your own thing. That's one part of it, right? So we'll actually set the record straight. In the banking world, they call it discoloration. So we're not allowed to call it mold because we're not licensed mold experts. So with discoloration, sometimes they know about it. Most of the time they do. And here's why. I've done a BPO. There's been a secondary BPO. There's been inspectors. There's been preservation companies. Somebody has probably reported if it's a big problem. But they're selling it as is. They may or may not know about it, but it's still an as-is sale, right? So it doesn't mean that because you've said, hey, it's got mold, that all of a sudden they're like, okay, we're gonna fold like a cheap suit, and okay, great, go ahead and take the property, right? But in that's what I would key in on, because that's opportunity. If you guys have great mold remediation companies, I mean, it's the fastest way to get other people out of the way that are scared of it. And you get it certified, you get it air tested, you know, and you move on the renovation either to rent or sell or whatever it is you do with the properties, and you can definitely find some good opportunity there.
Since you're on mold, I heard the other day that it gets placed on a FHA list of properties that have been cited with mold or with discoloration. So
I call it mold, so don't worry about it.
Right. So once it's placed on that list, if you do all the remediation or whatever, does it come off that list or does it remain on that list? If it's being held for rental, are you going to run into any problems?
I'm not aware of that list. Maybe you could share with me, and now I can learn something from being here. You know, so what I can tell you though is mold is one of those things that's curable. It's not like the property has mold and it's scarlet letter M on it, right? You know, like we have to tear it down because it had mold. Everything can be remediated, right? So everything, as long as a professional does it and they, you know, do air scrubbers and do all the right procedures that they're supposed to do with it, can, you know, get the property back to where it needs to be. So to answer your question, I'm not aware of that list. I wouldn't see how they could hold somebody accountable to what they, you know, like put on some type of scarlet letter list, you know, where they wouldn't be able to do something with the property. Otherwise, they would just tear it down and move on. And they wouldn't know, I mean, I would think, you know, FHA, although all banks have FHA portfolios within it, I wouldn't know how they would know like a Wells Fargo property sold with mold either. Maybe that's one of those...
Who's an inspector?
Inspector? Okay.
It was an inspector in Baltimore, and they said they placed it on this list.
Yeah.
It's when they're trying to sell initially, is it?
Cool. Questions?
Well, maybe give me some advice. Real life scenario, a house that is currently in foreclosure, Fannie Mae, and technically, and I've got a couple builders who go in and inspectors say, when we go for permitting to rehab or what needs to get done, this house is going to be condemned because of this and this and this. You know, the structure falling, the roof is caving in, your support beams on the bottom are rotted out, termite, you know. And the bank is still asking a very high price. When I spoke with a broker and you're saying, you know, deal directly with them, he said, well, this happened after they had gotten an appraisal and, you know, all the information that they had done, when they had some kind of a company that was coming out to take out some of the wood on the deck and, you know, fix it so they don't have anyone fall through. And then they noticed all of this damage, and then the roof had actually caved in after the fact. But no one's doing anything about it, even with supporting documents to say, look, I can't fix this house. You know, it's now the value really of the land or what I'm going to, you know, take it. It's going to be a complete tear down and rebuild. What's the best way to approach them to get them to understand that?
So if I'm sitting in your shoes, I mean, they're either going to get it or they're not, right? So you can only take a horse to water, right? You can't make it drink. Your best shot, and this is just a thought, I've never tried it, take a set of pictures, put the pictures in with the contract and send it, right? At least has a chance of getting there so they can see it. It's, you know, there's a buffer between you and the bank, right? Unless you get on the phone and you talk to the bank directly, so it's Fannie Mae, I mean, you could probably look up, you know, Fannie Mae's phone number, call up, figure it out. But is all that time, effort, and energy worth it, or move on, you know, laws of abundance, move on to the next one and figure it out, right? So instead of trying to shove round pegs in square holes, you know, figure out what's going on. And if it is that bad of condition where it's literally falling in on itself, you want it for the land or you want it for the house?
No, I want it for the land and build a new house.
A new house, okay, yep. So you can always take your shot, say this is why, write a letter, put it in, pictures, supporting, you know, like this is to at least justify why you're offering that price, you know. It's not to say that they would listen. That actually brings up a good point. When we get the contracts, here's how it works. Everybody has a portal, and different banks use different portals. We don't actually submit the actual contract to them directly. What happens is, well, 90% of the time we don't. What happens is they actually ask us to pull out all the key important terms, put it into like basically like a URL or a one-page form, and it gets uploaded to their site, and they negotiate off that. When everything gets back together, that's when they get the contract, that's when they get the addendums, we glue it together, and we send it back off to them and upload to their system.
So in a case like that, would that method allow for comments from your end to be uploaded and pictures from your end?
Oh, for sure. Yeah, it's an open-ended process. So, but you also have to remember this. I myself, you're an investor, I don't represent you. I work in the best interest of the seller, right? My job is to get the most amount of money in the shortest period of time, right? So in some ways, we're opposed, right? So my job is not to beat up the bank, or I take my job seriously. There might be some agents that don't. But my fiduciary responsibility lies with the seller, right? So what I'm doing is trying to get them the most money. But when you get in a situation like that, I'm trying to paint a picture that this is likely to be the best offer we're going to get.
Hey Josh, you mentioned a very important thing, time versus money. You talked about it with your VA, and you talked about it just now with an abundance of deals. How long are you going to pound your head against one deal and go find another one? Same thing with finding the bank money. Best deal, shortest amount of time. How's that balance? You know, most money, longest amount of time might not be the most cost effective for them. So how would you recommend a room of investors balance their deals to a bank where they can close quick and get the most amount of money? Because that's a fine line there.
Yeah, right. So it's what is the hot button, or what is the needs in the deal, right? So if you have a 90-day contract, you may not need short-term money, right? So that might not be the exact opportunity. But being quick, nimble, and able to act as fast as possible is usually the key to getting these types of deals done, right? So even when you do direct mail and you say, I'll buy your home in 10 days or whatever, right? So the ability, if you don't actually have the cash yourself, is to go to some type of private money source, hard money, the guys that are sitting here in the back of the room, and actually talk to them about how quickly they get done. Because sometimes it's not about what you pay. The art of the deal is to get the deal, right? And if it takes getting into a situation where you bring that in, then you've succeeded and you've won, because you've won the deal, right? So I see people all the time trying to fight over negotiating $1,000 here and there. Either numbers work or they don't. Like, it's an ARV. What is it? Stick to it. If it doesn't work, move on, right? The same kind of deal. If it's there and it works and you have a certain set of parameters, use it by any means necessary. If there's fat in the deal and you need to get it done in 5 days, it's better to have it than not have it, right? So I think that there's a time and a place for all of it. I also invest in properties. I don't buy any of my own, but I do direct marketing, mail marketing, and some of the other channels that that Josh was talking about here. And for me, I have private money, I have my own money, hard money, traditional financing. I use it all. So I think there's a time and place to mix it all together. But also, like he was talking about, and there's several books written about this, like, what is your one thing, right? So like, what is it in this marketing that you do well, right? Figure that out, and then go after it, right? So if you're able to get in great with a hard money lender or some type of private money, go after it, right? Because it's a symbiotic relationship. You're building and forging that relationship. It's a track record. So everything that you do moves you forward. I know that in the downturn of the market in 7 and 8, I had a relationship with a local bank in Baltimore that was gold, because I could actually go to them and still get stuff done because I had a track record of them going up to it. Same with some hard money lenders, and they're the ones that carried me through that period when things were not as they are today, for sure. Questions?
How can you get out of a deal?
How do you get out of a deal?
Yeah.
So how do you protect yourself on the front side to get out of deals, what you're asking? Like, as far as?
Sure.
Okay. So, I mean, it starts in the beginning, right? So you want to write things in to protect yourself to get out of it, right?
Well, let's say that you got a deal that's in with the bank, and because like I said earlier, with no inspection, that sort of stuff, but you get into the deal and the deal is locked solid, and you finally get to the property again, and like this guy, something just happens. But you're still locked in. How can you get out? Okay,
did you take pictures when you were there before? You should.
No.
You should. You're building a portfolio of your before and afters, or you're building a marketing. If you're wholesaling, you're doing all kinds of stuff, right? Mm-hmm. So you have to document, right? And the onus of that documentation is not on the bank. It's on you to go back and say, I went out, the roof caved in. Here's my before and after, time, date stamped, right? Always think about how you protect yourself in that situation. But a lot of times I see people trying to bail out of deals because they didn't do their due diligence up front, right? So they wrote the contract, oh, it looks like a great deal. It gets ratified, then they go out to the property and go, oh, never mind, it's not a good deal. Laugh all you want. Ben, how long does that happen? All the time. So ferreting that out and trying to get that out of the way, I talked to Ben and I said, Ben, you got to make sure these guys are in the house, Like, it's imperative, not only for your business, your pipeline, but for them as well. It's a huge waste of time on everybody's part. Yours, if you're doing it, or if if it has happened to you or whatever. And things happen, right? So with all these as-is contracts, if you have as-is with right to terminate, banks kind of look at that kind of not as good as just no inspections, but that's the way I would structure your deal. That way you at least have the ability to go in, do what you got to do, and get back out. Now, in the scenario you're talking about, that probably happens in the end, excuse me, closer to settlement. Just document it, you know? I mean, that's the safest way to do it. I know when I go in the house, I document it. We take pictures before and after, right? So everything from when I flip the house and sell it to someone, I want to be able to say, you know, somebody comes back and FHA says, you didn't do the work. Oh, sure I did. This is a crack house. This is HDTV, right? You know, like seriously, I've had this where I've put it together in an addendum and sent it to them. Here's before and afters. Here's the invoice for the work that I did. You can argue all you want about, you know, value or whatever that might be, but here's what it's worth. Here's what the comps say. Here's the work I did, right? So that's my recommendation. I do it, and I think that it's a good idea if everybody does. Right? I don't think you can overdo it.
So when I first got to real estate, one of the main ideas and notions was to get REO properties, you know, to try to get those type of properties. Do you see a typical margin where the REOs provide a better advantage in purchasing versus other? I'm trying to ascertain, like myself, because I've never gotten REO property, so I'm trying to look at it compared to the properties that I've gotten. I've already, you know,
off market.
acquired.
Yeah.
So I'm trying to kind of compare it in my mind. Is it just a myth, or
is it the unicorn, or is it? Yeah. Well, I can tell you, people are buying bank properties, right? It doesn't mean they're buying them properly, right? So what you always have to remember is, what is it for you, right? What is your basis in it? How your numbers work and how you arrive at that is ultimately yours. Everybody in this room does it a little bit differently. Everybody's threshold's a little bit differently. Everybody's structure with contractors a little differently, with funding, with all kinds of different things. The answer to your question, I think, more is a function of how are you going about getting them, right? So are you spinning your wheels, going after everything that's fresh on the market, that's, you know, priced where it looks great, right? Well, everybody's going to go get that, right? So maybe you're competing against 10 people, and that's why you're losing out, right? And then all of a sudden, everybody, you know, gets in a frenzy. And I'm seeing it now, you know, where people are paying numbers. I'm like, this doesn't make sense. I don't understand what you're thinking. But guess what? That's their business, not yours. Stick to your guns. Hold tight. It'll carry you through every market. If you have enough experience, or as you're gaining experience, trust your gut. If you don't, and you don't have that experience, lean on somebody. There's somebody in this room that will probably help you out. I'll help you out, right? That's how we all learn and grow together.
We stick to the basic premise that you said with when a new property hits the market, that we stay in that 10% range of our bid price. But with those properties that have been in the market for 90 to 120 days, with variation, how much wiggle room would we have on those type of properties as compared to one that just hit the market?
Right. So every bank's different, every situation is different. But what I will tell you is, when you have the opportunity to find a deal, that's when you're going to find it. That's when you're going to have the more negotiating power, because there's either less offers, they're softening up for a reduction, something else is happening, it's on their bosses, is on the VP's screen, going, this 166 days on market, what the heck's going on? I want this gone, get it out of here. And you don't really know the exact situation. I just know that it's around that 90 to 120 day where it starts to soften up a little bit, and they start to be able to listen a little bit differently.
Is that, you know, what you're talking about when the banks, you have a little bit more wiggle room between the 90 and the 120 days. Does that also get impacted by the time of year it is, whether it's, you know?
Yeah, for sure.
Yeah, so like winter time, you know.
So I also work for a builder. Builders asked me to clear out their inventory because they have to report to investors for September 30th. Same thing happens in the year for the banks. You'll usually find some really good deals in December because they want to get it off their books. Anybody interested in new construction, by the way? So I have a builder, if you guys want to talk to me afterwards, offering $50,000 off already built home, can settle by September 30th in Owings Mills. So if anybody's interested, let me know.
Asking price?
What's that?
Asking price?
Well, they go for $350 and this is at $300, so. New construction townhomes, it's not going to be $100 grand, you know. Anybody else?
credits, like what's the minimum offer? Can you get a HUD credit for an REO?
HUD credit, I'm not familiar with that.
That's pretty much, I was told it was a HUD credit, like say, the house was at 100,000 or something like that, and on paper it would sell for 100, but let's say my offer was at 90,000, and then I could like do a HUD credit, and I would actually get the property for 90,000, but on paper it would still be at 100, and the realtor would still get, the commission off of 100 as opposed to the 90.
All news to me. I don't claim to know everything. I know a good bit, but that's new to me. If you find out about that, let me know. I'm always trying to learn and grow. Anybody else? It's been some great questions. Since everybody, don't be afraid to speak. I'm up here, getting out of my comfort zone.
In terms of earnest money deposit, is there a number that is below a threshold that they just discussed?
Yeah, I mean, if you're sending in like $500 earnest money deposits, no matter how else it's structured, they're probably going to kind of look around for something else. I know that Fannie's threshold in certain banks, they're looking for 5 to 10% because they know you're serious at that point, right? So you put that money in jeopardy, basically, that you have skin in the game and you're not as willing to walk away from it. With 500 bucks, I think that everybody in this room at some point will walk away from a deal if it was questionable, whereas if you had 10% into it, you might actually, move forward with it. But yeah, that's actually another point in the structure of a contract, which I didn't even touch on, is you can bump up the earnest money deposit to kind of strengthen against others.
I was about to say, now opposite of that, let's say, for a 100K property, or I don't know, 70K property, you offer 10 to 15K for D&D. If you drop the price, I don't know, let's say it's 70K and you offer 60K, and it's relatively new to the market, but your earnest money is 15,000. Would they look at that, a little more serious?
If you're the sole offer, they probably would. They'll negotiate with you and try and figure that out. If you're competing against others, there's going to come a certain threshold where they're not going to, if they got a full price offer, and they're going to take their chance because that guy's got a $2,000 earnest money deposit as opposed to, a $10,000 or $15,000 earnest money deposit and, $10,000 less in their pocket on a net.
Gotcha.
If you put in an offer with a cash offer with personal proof of funds to start off, but then the process ended up taking longer than you expected, and we end up acquiring other properties with the cash, but we have access to hard money. Is that something that you could do, or is it something that?
Every bank's different, right? So I know there's an auction site specifically. You said it's cash, it's got to be cash. Like there is no other way around it. But every bank's different. Now I say this to you, I don't think there's a bank in this world, if you show up with a check, you're like, I'm here, it's going to close, that there is going to be like, no thanks, we're going to sell it to somebody else, right? So if that comes from hard money or private money or traditional financing, you've been able to get there. What I can tell you is they won't delay the closing without a fuss if you need to switch because of the situation. Because the way they're looking at it is you've allocated those funds. You said, okay, I'm buying this property, it's under contract, it's sitting here. It's not a game of which one comes first, right? They're saying, okay, I see it, you're buying it, you have it, therefore, when we're good to go, you should have it.
Hey Josh, something along those lines that we actually see a lot at Hard Money Bankers is we have a lot of borrowers that do all cash offers, and they come to us and the title company comes back a few days before closing and say, this thing isn't a cash offer, you guys are financing it, because they get closing instructions from us as a lender, and we kind of play it as it's really not a big deal, it happens all the time, which truly believe it's not a huge deal, it just has to be presented the correct way. And a lot of the times it's, okay, get with your realtor or create an addendum yourself and figure out a way to get it in front of them. Because it seems like, and correct me if I'm wrong, a lot of the times the banks are okay to change it, but they need to go through the official process, and we kind of obviously have the borrower's backs and say, hey, funds are ready, we'll close, just get us, we'll close whenever.
The easiest way to work through that is a commitment letter, like not a pre-approval, but a full-blown commitment letter, because then it's like, what's up?
They already have loan docs.
Yeah, okay, so at that point, like I'm saying, be nice about it, figure it out, work your way through the system, get it to the point. Because if the asset manager says, let's put this back on the market, I'm going, docs are there, cash is there, why are we going to do this again?
Lender, they know they're going to fund it.
Right.
We got, if you've ever dealt with like Samuel or White's office, Samuel L. White, he does like they do a lot of HUD stuff, a lot of auction stuff. It's the same thing, and you know, reach out to your lender or whoever and say, I mean, I'd reach out to that office and be like, listen, we've funded 200 deals and you guys know we're going to fund it. Just get this guy the addendum, and literally 100% of the time.
Yeah. Again, right?
But they have to go through the process. I mean, unfortunately, banks
they're going to cut their
have actual processes and documents that, and you know, they have to follow, which is fine. You know, it's good to have that, so it's not something to really freak out about.
Yeah, I mean, are they going to cut their nose off to spite their face? Probably not. I mean, you might find some. I know the harder parts of that are like government organizations, because they're like, oh no, this is how it works. You know, this is what it says. This is Rule 5B. You know, and
actually, I think the title company helps out. The good title company helps a lot as well.
Yeah.
The title company seems to be like the direct contact with, you know, getting seller side instructions.
Right.
That's always good as well to make sure, you know. One of the biggest rules I see is if you're buying a property at auction.com or something, do not use AltaSource, do not use Premier Title. They outsource their
great point, Jason.
Processing to other countries, and it makes it very, very challenging because they don't get it. They're just following the script.
Here's a friendly advice. This isn't even me as an REO agent. This is me saying to you as a friend, don't use the bank. Is there a bank title company in here? All right, good. We're in a safe environment.
We'll buy you a drink afterwards.
All right. So what's happening? Because they're going to make their money, right? Because they're representing the bank. So I'm even saying that, and they're part of it. It's not you're not taking anything away other than a couple extra dollars. Depending on, there's some good ones, but you always want somebody to represent your best interests, right? You want somebody that you know and can trust and lean on to say that we did the title work right. Because look, these things went through a lot to get to this point. Robo-signing, like, you know, 3 years ago, all that stuff, right? So you want to be able to have clear merchantable title that you can sell, like, at a later date. At some point, you're going to sell the house, whether you're renting, you're passing on to your heirs, you're passing the problem down to somebody else. If there's a messed up chain of title, they have quiet title actions. I'm dealing with it on a property I'm buying in Florida, right? The service link actually will not give me the title work to give to my title attorney who's reviewing it in Florida. And I'm going, it's a quiet title action. What's going on? Like, why? Why is it happening? And they will not actually release the title to me. So I'm like, I get the cash, I'm going to close. It's not a big deal. I want to know what's going on. That's why I have this title company involved, right? It's so that I can actually have somebody look after my best interest. Fiduciary responsibilities. That bank's title company is working for who? The bank.
It's not worth the $500 of owner's title insurance to use them. Because that's typically the incentive. Oh, they're going to, or it's I have to use them, which isn't the case either.
Not in the state of Maryland.
Yeah. And Service Link is another one besides AltaSource and Premier. And chances are it's nothing malicious with them. It's just like, oh, I got to follow my script, and we haven't come across this before, so I don't know how to do that, Josh.
Yeah.
It makes it challenging.
It does.
A lot of really good investor-friendly title companies locally.
Absolutely. There's definitely one that we partner with and help all of our clients go to because they do it right. They're small enough, they're nimble, they can get stuff done quickly. So, anybody else? Questions?
Make sure you give your contact information to everybody. Did Ben leave?
Ben did have to go. He's got to pick his daughter up in Hartford County at 9 o'clock.
Contact, whatever contact you want to give.
All right. Ben, you can email me. I won't give everybody my cell phone because I try not to be on cell phones too much. But let me get Ben's information. My email is Josh at the MD Home Team. Ben was nice enough to leave some cards here on my phone.
What was that again?
Josh at the MD Home Team. MD's like Maryland. Yeah, absolutely. These are Ben's cards.
We bought 2 from you.
Yeah, great.
You know what? I can send it out on Meetup link too.
Okay, great.
We can email everybody out on Meetup link.
Yep.
We missed out on 10 though.
Yeah, well, that's, hey, if you're winning on 20%, you're doing something right. It's just very competitive out there.
Oh my God.
All right, so it's Ben at the MD Home Team. And Ben, honestly, here's the way it works. Let me tell you about the structure of my team. Ben is our investor specialist. That's all he does all day. He markets our off-market properties. He also markets our bank properties, and then, you know, obviously other stuff. Wholesalers bring him stuff. You know, he's always trying to find people to you know, put properties in front of and create opportunities for everybody. So, you know, in our team, like, you could call me, we could have a conversation, but I'm not the one that's functionally going to do it. So, you know, our team, I have 19 people that work for me. Our team is leveraged. What I'm trying to do is focus on working on the 20%, not the 80%. VAs, all this stuff we're talking about, right? I can do all of it. I've done all of it. I grew from one person to what I have now. It's not something, so in our business we create silos, right? So in that silo, Ben is the expert because Ben is the point of contact. He's the one that kind of handles everything.
What are the primary areas that you guys have the REOs available?
Carroll County, Harford County, Baltimore County, Baltimore City, and a little bit of Anne Arundel County. I was in PG. Logistically, it didn't work so well, so we actually have a couple left, and we're kind of pulling back up the corridor. PG? We have one on Leona. Actually, that just settled, but we have another one coming in Hyattsville.
Okay.
And that's the thing. I mean, you ask me a question, I'll be like, oh yeah, we got 3 over here. I just have one of those memories with addresses. Like when I worked in lending, which is what I did before this, you know, people would say borrowers' names, and I'd be like, I don't know. And they're like, oh, 123 Main Street. Like, oh, yeah, okay, and tell them everything about it, you know. But did everybody get Ben's, you got his email address? Let me give you his phone number. Just give me his cell phone number. His cell phone number, not mine. Right. 410-905-4735, and I'm sure Ben has no problem you calling his cell phone because that's how he makes his living. Right.
Hi, Josh. Really appreciate it.
Yeah. Thanks, everybody.
Good stuff.